How you guys doing today? So my name is Rami Hamady. I'm an agent with Family for Solidity out here in Boston, Massachusetts. I'm going to go over today the CBO 100, an HMS series product from one of our core carriers, Americo. Now, one of the main things I love about the CBO 100 is that it's not a traditional term product, it's a universal life policy. So what that means is it can carry the price of a term product, however, it can last you pretty much close to forever, and I'll kind of explain that point momentarily. So one of the main things I love about the CBO 100 is that first it goes up to anywhere for terms between 15, 20, 25, and 30 years. Now this product we use primarily to protect a mortgage. Now let's say that there's a husband and wife where the husband makes the majority of the money and the wife wants to make sure if the husband was ever to get sick that the husband will be taken care of and that income will not be replaced. This is what this product will do. Not to mention, guys, it's called CBO for a reason, which that means cashback option 100%. So all that means is at the end of the term, whether it be 15, 20, 25, or 30 years, the individual is going to have two options. One, they can get a full return of premium on all premiums paid at the end of the policy, assuming that the benefits were not used. Or two, they can carry anywhere between 70% of the face amount forever for free. It just becomes reduced paid up insurance. However, it will no longer carry what I like to call a living benefit. Now, this is a key important concept of this product, the living benefit. In the event there is any critical, any chronic, or any terminal illness, such as a stroke, heart attack, or stage 2 cancer or more, the individual will have access to that death benefit while he's living. So an easy example would be, suppose he has $100,000 of coverage to protect his mortgage. He has a heart attack at night, he goes to the doctor the next morning, doctor says, yes, yes, John, you had a heart attack. He's gonna say, okay, he's gonna call Americo, he's gonna say, I wanna activate my living benefit. He's then going to call the carrier is going to verify with the doctor. Once his medical records are verified, he's going to have actually access to all of this money while he's alive. Now, that's a really important thing to have, because at the end of the day, people are going to die one of two ways. They're either going to die in an accident or they're going to get sick and die of an illness. This will at least protect the mortgage and protect the income of that individual. Not to mention, guys, it's a pretty easy concept to relate to the client. So what I'm going to do is I'm going to show you guys what I primarily do to relay this concept and how I can make it easier for you guys to tell the client, hey, why is this CBO a good fit for you? So not to mention the living benefit, what we call the critical illness rider, not to mention the fact that you get all the money back at the end of your term. In addition, if you ever cannot perform 2 out of 6 activities of daily living, you have access to the money while you're living. If this individual was ever to become unemployed and a doctor deemed them medically unfit to work due to an injury or sickness, they have access to this money while living. So at the same time, guys, it does multiple things here. It protects their family, it protects their health, and it protects their mortgage. And at the end of the term, assuming they don't use their benefit, all of that money that they get back is going to go either to a new home, it's going to go to their children, to their grandchildren, it's going to cover a marriage, it's going to cover a cost of vacation. This can literally be an emergency fund. I call it a forced saving account with a huge safety net, okay? Because that family will know in 15, 20, 25, or 30 years whether they want to keep the 70% of insurance for free. In this case, it will be $70,000 of insurance for free forever, or all the money back. Now, I'm going to go back to that example that I was going to say, how you guys can easily explain this to a client. What I do is I take the back of the financial inventory, I'll write 2 words. I'll write bank and CBO 100 side by side. I'll then draw a timeline. I'll write day 1 on the very bottom on both displays, okay? Then you're going to tell the client, listen, I'm not going to ask you to show me your bank statements, but I know if I did ask you to show me them, you and your wife save on average $100 from your bank check every single month, month to month. They're going to agree with you. They're going to say, yes, we do. $100, guys. So you take that $100, you multiply it by 12, which is 12 months in a year. So if they're saving with the bank $100 a month perfectly, assuming nothing ever happens to them, they don't get sick, they don't have to access their emergency funds, they're going to have $1,200 saved after year 1. Year 2 will be $2,400, year 3, $3,600, and it'll continue to go up. Now, at the end of 30 years, they would have accumulated $36,000. That's at the bank. If they get sick, year 3, he only has $3,600 to pay his mortgage, pay his bills, and do the math. On this side, it doesn't matter if the individual gets sick, guys, day 1 or year 30. He's going to have access to $100,000 or more, assuming that the premium, that $100, is going to equal this face amount. So you just ask the client a very simple thing. You say, guys, where does it make more sense to you? On this side, where if you get sick day 1, month 36, year 28, year 20, you'll always have $100,000. Or do you want to take a risk, leave money in a bank where it has the potential to get frozen through probate, the potential to lose money due to taxes. Not to mention, if you get sick year 3, you only have $3,600 saved. At the end of the term, assuming nothing happens at the end of 30 years, they're going to get back their $36,000 just like they kept in the bank. The only difference is during that 30-year period, they had a forced saving account with a huge safety net. So this is a no-brainer, guys, for any client that's healthy enough to qualify for a CBO, because everybody saves money. The thing is, you have to explain it, it's not an extra expense, because $100 is sitting in that bank on a month-to-month basis. It's just sitting there. It becomes $200, becomes $300. Sure, they may spend bills, sure, it may go up and down, but if you were to literally do their profit and loss, like we all do in business, you would see that they're after their expenses and after their income, they're saving $100 every single month. All you're going to do is explain to them you're reallocating that money from a place that has the potential to lose money and get frozen, and you're moving it to immediate tax you pay out to your family, you're protecting the health of that individual, and you're providing an immediate lump sum return once the term is done. Or they're going to have free insurance forever. And the client is going to thank you for that at the end of the day. All you have to do, though, is take your time, ask the appropriate questions, and explain this concept the same exact way I did today. And I promise you guys, you will be helping many, many families.